In this video, we'll be taking a look at a few chart analyses to get prepared for the week ahead. If you love the content, please like, subscribe, and leave your thoughts in the comment section down below. If you're not part of our Discord, it's totally free. Use the link in the description below to join our Discord community so you get to interact with other professional traders within our community. And lastly, if you're interested in learning to trade Forex like a professional, check out our complete Forex trading course on Udemy. I strongly believe the course is going to help you navigate the world of Forex and cryptocurrency, whatever it is you trade. It's going to help you navigate those markets and hopefully help you become a professional and profitable trader. So we'll be talking about gold, Nasdaq, crude oil, US500, which is S&P 500, and GBP-USD. So whichever chart you feel comfortable with, whatever charts you're looking forward to watching out for in this video, you can use the timestamp below to navigate those videos and get what you want, and leave your thoughts in the comment section if you have questions, right? So as usual, I'll be starting with the gold charts on the 4 hours time frame. So this is gold chart on 4 hours time frame on my screen. What you can see is over here we seem to have created some sort of a bullish continuation pattern. So last week we talked about the possibility of price having a bearish breakout, right, taking its lows. So I'm just going to recap what we did last week. So excuse me, I'm gonna move this a little up so it's easy to get back. So last week there was this price action that formed with a potential of a bearish breakout. So I talked about this last week, that price could take out this area of support following the symmetrical triangle. But I also told you I am likely not going to be taking that trade because we have a trend line over here that's probably going to see that's gonna probably going to hold price backwards or prevent price from falling lower, right? So that's the reason why I opted out from this trade and decided not to take this trade, as I've explained earlier on our video last week. So we did get a breakout, fortunately for us, or I don't know if that was fortunate for many traders, but what we can see is the trend line held and we had a good bounce, sending price upwards. So the new structure formed after we created this lower low was, or is, a bullish continuation pattern, as you can see on the chart. So you can see price created lower highs and lower lows and created this bullish flag. So this is a bullish continuation pattern. Finally, we had a good bullish breakout on Friday, right? So good bullish breakout, and now this seems like a good time to buy, right? So I'm going to show you I'm watching out for to go long on this chart. I actually went long after the bounce up of this trend line, and I'm going to go down to the lower time frame so I can show you exactly what I'm talking about. So on the 1 hour time frame, what you can see on the screen is a bounce off of these lows followed by a breakout following this consolidation. So if you take these highs and this consolidation over here, you can see we had a good candlestick breakout. This around the price level where I got in this trade, and I think I'm up 300 pips right now. So if you're not in on gold right now, what I would expect you to watch out for is a bit of a consolidation over these price levels followed by a bullish breakout. So a continuation of this massive move we already had on Friday, right? So this is the only scenario where I would jump into a trade if I wasn't already in on a good buy position, right? So the reason why we do this is because when this happens, we go long on a breakout from the consolidation, and our stop loss is easily placed underneath the consolidation that leads to the breakouts, right? So this gives you a better risk to reward ratio when you wait for price to play out like this, or create these patterns where we see clear situations or clear price levels to put our stop loss. Because if you're going to jump into a trade right now, so let's say for example you jump into a trade over here, the best possible scenario to put your stop loss would be around these lows, and this is just too wide of a stop loss in my opinion for you to go long on right now, because there's a good chance we may see price reversal to the downside over here before we go up. So that's the reason why we wait for those consolidations, like I explained earlier, something like this followed by a breakout. So if this happens and we get a breakout, then this consolidation over here would already be your confirmation that okay, the market is ready to start going higher again, right? And you'll just be right on time to get into this trade as we go higher. But jumping into a trade right now means exposing yourself to so many risks because there's a good chance price goes lower. So even if this consolidation doesn't happen, right? So if this doesn't happen, then if we're going to reverse, then we're likely going to go down all the way to these price levels, and better for you because then you tend to get better price entry, right? So another reason why I would suggest patience is because we are currently trading around an area of support. So you could call this an area of support, right? This can be a very good area of support, which means price could slightly creep into this area of area of resistance, excuse me. So this can be a very good area of resistance, so which means price could slowly creep, shoot upward into this area of resistance, thinking, oh, we are likely going to keep going higher now, and we see a price reversal to the downside, which then gives us a better consideration before the actual breakout. So these are things to pay attention to, things to watch out for. So if you're not already in on this trade around these lows, then I would suggest you exercise more patience before jumping into a trade like this, because you do not want to be exposed to the potential downside if gold tends to go lower before going higher. These things happens in the market, so you have to be ready for all the possible scenarios, right? So this is my brief outlook for gold. I'm not thinking about going short right now because it makes no sense to go short. The only reason why I'll be going short is, or the only situation where I go short is if we come down, consolidate a little on this trend line, and give us a bearish breakout. Then this would suggest a potential movement to the downside. And there again, if you're going to do that, then you should also be thinking about extending this channel, right? So you'll be thinking about extending this channel, because price could come to this the lows of the channel, the support level of the channel, and then bounce to the upside. But that will already give you a decent opportunity to cash out some profits before we potentially see another reversal, right? But that's the only case I'm going to think about going short, but I don't think that's going to happen right now or anytime soon. So I'm going to stick with my bullish case scenario and watch the market, see what it does. Then maybe I could possibly pick a second entry and ride these positions as we go higher. So going back to the 4 hours time frame, you can see something to note here is that we are in a solid bullish trend, right? So 4 hours time frame, you can see consistent price rise, right? Consistent price increase. So bullish continuation, breakout, consolidation, breakout, and that's how it's been for a while now. And you can see right now we've had another bullish continuation pattern, and it's only logical to anticipate a bullish move which goes in line with the current bullish trend, right? But in order to pick our entry, we have to be more patient and see how price reacts to this current price action, right? So we either wait for a pop-up to the upside into this area of value, consolidate a little, and then give us a good bullish breakout to go long. This would be a better risk to reward ratio for you, in my opinion, and it gives you a sense of a price level to put your stop loss, which would be underneath the consolidation that leads to a breakout. That's pending if this area acts as a possible area of resistance, right? So these are things to watch out for, and it's compels us to be more patient with our entry so we can get the best possible entries while we watch the market as it does what it does, right? That's it briefly for gold. Moving on, we'll be talking about Nasdaq real quick. So Nasdaq, we talked about this last week as well, and with the possibility of prices moving off of this lows to the upside, and that's exactly what happened, right? So you can see we had a price decline from up here down, which is what I suggested if you're going to pick a good entry, and stop loss was placed underneath these price levels, and you can see the massive move to the upside, right? So it has played out exactly as I expected, and now we seem to be consolidating within another area of value for a potential move to the upside. So I'm going to go down to the lower time frame. So first of all, before we go down to the lower time frame, I'm going to mark the highs. So this is going to be our potential take profit level, right? So this area of resistance is going to be our potential take profit level, and we're going to see how we can take advantage of this price action till we possibly see price heading to this area of value. Mind you, US500, US30, also indices, they've all broken all-time highs. Nasdaq is what's left. So Nasdaq hasn't gotten the all-time highs yet. I think this coming week or 2 weeks from now, we're going to see price trading at an all-time highs. So going on to the lower time frame, so 2 hours for example, what we can see is a steady grind to the upside. You can see higher highs, higher lows, good reversal, bounce off of this area of value, consolidation, good breakout. Now consolidating above this area of value. So this consolidation signifies that this is a solid area of value to pay attention to, right? And if you're paying attention to that, you should also be paying attention to the new area of resistance level that's been formed right now, which is what we have over here. So taking this area of resistance, you can clearly see that price is struggling to break through these price levels, right? So my best case scenario will be waiting for a good breakout from this level. So the moment price breaks out from this level, you should be able to go long, because this is the consolidation I always talk about when we have a bullish move. So we have a good bullish move. Now we are having this consolidation over here. So if this consolidation ends with a bullish breakout, for example, then your entry should be immediately after the breakout, because this consolidation would already be your confirmation, right? So when this happens, you enter the breakout. So that's going to be the potential price breakout level. Stop loss can be underneath the consolidation that leads to the breakout, because when we get here, it means if price gets here, for example, if price gets here to the stop loss, it means we're possibly or likely going to experience a fake out and price reversal. So that's why this area will be a logical price level to put your stop loss, while take profit could be within this zone here where we have our resistance level for take profit. So if you measure this price movement, then that will be a potential price rise of 400 pips. So 400 pips take profit price levels to 100 pips stop loss. So that's 1:4. So you trade of 1:4. That sounds like a decent risk to reward ratio in my opinion, and I think this is exactly what we're going to see this week. So this is a bullish case scenario for Nasdaq. I don't see any reason why you want to go short right now, because this chart screams bulls, right? So I don't see any reason why you want to go short. That's the reason why I'm going to stick to my bullish thesis. But for those who are curious to know what will happen if we were to go short, we'll be waiting for more consolidation over here and seeing if price takes out this area of support. So if price takes out this area of value, then that could give you a good argument for a short position. Take profit will be around its lows. Stop loss should be a little above the consolidation or at least the breakout. But the reason why I wouldn't be going short is because this trend is bullish. Fundamentals are bullish for the economy, the US economy, and this means price or the market will move in the favor of the trend. So even if we get a bearish breakout, it could meet a swift end. So we may get a sharp decline to the downside and then it moves to the upside because the bulls are in charge, because we are in a bullish trend, right? So that's the reason I'm more bullish than bearish. Even if we get a bearish breakout, I won't be going short. It makes no sense to me right now until I see something different. Then I'm going to change my view on this. But for now, I'm going to stick bullish and I'm going to wait for price to take a area of resistance for me to go long. Meanwhile, I'm already on this trade. I got in around these price levels. I've got two entries, one over here and one over here, I think. Yeah. So I'm holding my two positions, and if we get a good breakout, I think I'm going to go in for third position and aim for the all-time highs, right? Where we're going to make really good amount of money if we get there. Remember, trade with good risk management. Markets can be unpredictable sometimes, but this is how I trade. I watch out for the price levels, what makes sense, watch out for trends, check out fundamentals for good backing, and getting on the markets whenever the opportunity presents itself. And this looks like a good opportunity to go long when we do get a confirmation of a bullish breakout from this newly formed area of resistance. That's it for Nasdaq. Moving on, we're talking about crude oil. So crude oil, real quick, daily time frame, and we seem to be trading within a range. I expect price of crude oil to slowly creep to the upside, coming into this area of resistance, possibly meeting an end where we're going to see another reversal to the downside. So this is just my opinion on the market, but we're going to see how we can back this up with the chart and see how we can spot our good trade opportunities for the week ahead. So this is what I'm watching out for. Good area of resistance, good area of support. I think we're going to be in a range for a while, and to do that we need to trade swing highs and swing lows, or just trade the choppy market as we go higher or as we come lower. So going down to the, let's see, 2 hours chart, for example, what we can see is clean and clear market structure, right? So you can see bounced up of the lows of the support level, went up, created a higher low, took out this area of value. So this area of value was a support level before, turned resistance, took it out, came back to that level, and acted as a good retest. Now back to a support. So this means this area of value is now a valid area of value. So anytime we get price coming to this level, we have to pay attention, right? Either we'll get a breakout or we'll get a bounce. But for now, we seem to have had a bounce, and I think it's logical right now to expect price appreciation from here to the highs, right? So this is what I'm going to be watching out for. It may not move exactly like this, but I think we're going higher long term, at least short to medium term, right? So first target would be around this area of resistance, or you could use this area of resistance, right? So this area of value is going to be my first price target, right? I'm already on this trade as well. I got in a little early after the bounce, but if you're not in yet, I think let's go to the 1 hour time frame. You want to exercise more patience, right? Because as you can see, we are currently consolidating. So this is what I'm talking about when I say confirmation. So we are currently consolidating after we bounced off this area of value. So I think it is logical to expect or to wait for more consolidation followed by a bullish move to the upside. So by the time we take out this consolidation, we get a bullish breakout from this consolidation, then that could be your confirmation to go in for a long position, and your stop loss would be underneath the consolidation, at least the breakout, which will give you a tight stop loss, right? And take profit target is going to be around this area of value we marked over here, right? So this is going to be just one area of value. You could take out some profit even if you don't take out the whole of your profit, because I think when eventually you're going to see price going as high as these price levels, then these price levels, then eventually getting into the major area of resistance. So this is how I'm going to trade crude oil right now. Mind you, I'm already on this trade, so I may not be looking towards taking a new entry, right? Because I'm already in on this and my price target is around this area of value. So I'm going to watch out for that, see how it happens, and take out some profit when we get to that price levels. So alternatively, something that could happen could be, before we get that good breakout to the upside, we could see a price decline to the downside, giving us a higher low before we go higher. And if you extrapolate the highs, so this could be a good consolidation, for a better breakout. So this would even make your confirmation even more solid, right? So this is something to pay attention to. Then you would have had a low, a higher low, a higher low, another one here before we get the breakout. So these all validate your thesis to going long on crude oil. So for a bearish case scenario, mind you, I wouldn't be going bearish because it doesn't make sense to me, but I'm still going to talk about it, right? So to go short, I'm going to wait for price to come here, consolidate a little around this price level, and give us a good bearish breakout. So if we do get a bearish breakout to the downside, then this could be an opportunity to go short. But for me, I wouldn't be going short because it just doesn't make sense right now, in my opinion, right? But by the time it happens, I'm going to reevaluate the market, reassess my thesis, my strategy to see if it aligns with, my understanding of market structure and price trends. Then if it does, we'll get a breakout, I might go in. But I think we're going to have another weekly analysis before this happens. But other than this, I'm going to stay bullish and go in line with the bullish case scenario I explained earlier on to go long. But meanwhile, I explained that for those who aren't in on the trade yet, but because I'm already in, so I won't be taking this trade, right? Because I'm already in for a long position. That's it briefly for crude oil. Moving on, we're talking about US500. So this is similar to what we have on Nasdaq. You can see clean market structure, good area of value, nice bounce, good area of resistance, good breakout, nice retest, solid retest. Exactly what I explained last week, and if you waited patiently for us to come into this area of value before you went long, you should be up around 1,200 pips right now, right? So that's it for US500. And I also explained the fact that the pips moves like amazingly well. You make a ton of profits if you get one trade right? So that's the benefit of trading US500. So going out to lower time frame, let's see 1 hour time frame. If you're not in this trade, I'm not on this trade, and I don't think I'll be getting in. But for those who intends to get in, good area of resistance, nice breakouts, good retest, consolidation, good breakouts. So this is what I'm talking about. So After this breakout, this retest, this whole consolidation here is your confirmation to go long, especially when we get a bullish breakout from that consolidation. So if you are gone in here, for example, your stop loss would have been just underneath these lows, because this is the consolidation that leads to the breakout, and you can just hold your trade as we go higher. Because right now on US500 we're in price discoveries, and I think we're going to keep going higher till the market decides to call it quits. So for those who aren't in yet, I would suggest you wait patiently for a little move to the downside, so just to tighten that stop loss level, because if we go down, I think we're going to just, climb higher, right? So if you're able to get a better entry around these price levels, so if you're able to get another entry around these price levels, your stop loss should be underneath these lows. I know this is going to be a big stop loss, right, for those trading small accounts. This is going to be around 250 pips, and 250 pips stop loss is a decent stop loss for trading US500. Like, you could ask for nothing more, right? That's US500 because the pips moves really fast, and if you're able to get in that trade following your confirmations, then a potential price movement to this price level would be around 1,500 pips. A movement to this price level is already 500 pips, which is a 1 to 2 ratio of risk to reward ratio, right? So even if you wait for a 1,000 pips price movement, that's 1:4 already. So if you have the account balance, the risk management, then you could wait for something like this to get in on US500 and just watch the market do its thing, right? This is a no-brainer, I think. And the only reason why this trade won't work out is if the market turns out to go crazy, because markets can be like that sometimes. Market turns out to go crazy, then this could just simply backfire. You could see price tanking and just dumping hard. I don't know why that will happen, but it happens. That's why we trade with stop losses, employ good risk management, just so we are ready for whatever the market throws at us. So this is what I'm watching out for US500. I wouldn't be going short. I don't see any reason why you want to go short. If that changes, I'm going to share my thoughts in our Discord community. Please use the link in the description below to join that. And if you disagree with me on any of this chart analysis so far, please leave your thoughts in the comment section and explain why you think I'm wrong, okay? In trading, I don't think anyone is actually 100% right or 100% wrong. It's all about perspective, how we see the market, and how we approach the market, right? It also depends on our risk tolerance and our understanding of price action and strategies and all that. So if you disagree with me, leave your thoughts in the comment section. I could learn anything or two from you, and just please join our Discord community, because you're going to learn a lot, and we are also going to learn a lot from you, right? Lastly, we're going to talk about GBP-USD. So GBP-USD chart on the 4 hours time frame, this looks like a solid bullish trend, right? Because so far it's been higher highs, higher lows, but we seem to have had an extended price decline to this area of value. So this area of value right now, so an area of support, I'm going to zoom in a little. This area of value that we're currently trading at hasn't put in a lower low yet. So like creating a lower low over here, then maybe going back to create a lower highs. So for us to conclude that this is possibly going to be a change in market structure, because as it is now, the market structure on this chart is still very bullish. You can see it clearly on the chart: higher highs, higher lows, no clear lower highs and lower lows yet following the overall market structure, right? So that's why I'm a little bullish on this. So being bullish on this means waiting for the right time to get in on your trade. So what we can see over here seems like a falling wedge, right? So what I'm watching out for is more consolidation over here, followed by a bullish breakout to the upside. So when this bullish breakout happens, then you could go long. Stop loss could easily be underneath this area of value. Take profit targets, first one can be around this area of resistance or area of value, and second one can be over here if we decide to go higher. This is how I'm going to trade GBP-USD for a bullish case scenario. So on this, we do have a bullish and bearish case scenario. So I'm going to explain the bullish case scenario first, right? So the reason why I think this could happen is because this could potentially lead to a head and shoulder that could eventually lead down and go lower, right? Because you can see the structure already. We already have a left shoulder, we have a head. So if this happens, this could give rise to a right shoulder, which could eventually lead to a head and shoulder pattern with a bearish breakout on the neckline. So this area of value over here is currently known as a neckline, but this pattern hasn't been fully formed yet, and there's a good chance it may never form. Okay, so I'm just looking into the future a little bit over here, and what you can see is this is clearly set up for a nice bullish trade opportunity if we do get a bullish breakout from this falling wedge. Something else to note is that this falling wedge also looks like a bullish bullish divergence, right? You can see price creating lower lows over here, but on the RSI we have higher lows, so we have one and another one here, but on the price action we can see lower lows. So this is known as a bullish divergence. So bullish divergence, falling wedge, bouncing off of this area of value. If we do get a bullish breakout from this wedge, then this should be a no-brainer. You should get in on this trade, tight stop loss, good risk to reward ratio, and call it a day, right? So that's my bullish case scenario for GBP-USD. So as for bearish case scenarios, we are going to be, I'm going to get rid of this. So bearish case scenario, I'm going to get rid of this as well. We are simply going to wait for consolidation over here. Good proper consolidation followed by a bearish breakout to the downside. So if we do get a bearish breakout, then you could go short on the breakout. Stop loss simply placed above the consolidation at least the breakout, and you could trail your positions as we go lower, because we could go as low as these price levels, or these lows. So this is what I'll be watching out for if we do get a bearish breakout from this area of value. So that's it briefly for GBP-USD and this week's analysis. If you love the content, please like, subscribe, leave your thoughts in the comment section down below. If you're interested in learning trade first, like a professional, learning to carry out professional market analysis that could give you good trade opportunities to make decent profits, check out our complete Forex trading course. It's going to help you a lot. So that's it from me, guys. See you next week.